The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 22nd day of May, and almost read January, February, March, April, May. Almost finished the 5th month of the year, halfway through the year. Unbelievable. All right, well, the Dow's down 16 at 23,990s. The S&P is up 4.85 at 2737. And this is going to be very interesting. Why? Let me just show you this quickly. I've got here, this is the Chapman wave methodology. You try to identify the lowest low bar, and you merely count each successively higher peak. You want to get to the 4th highest peak, and that is a peak D. At that 4th highest peak, other things can happen. It can continue higher, or it could have the deepest pullback. That's where we reassess. But the object is to get from a buy signal to a buy mode. Buy signal gets upgraded to a buy mode. The moment I say buy mode with an up arrow, it implies we need at least 4 higher peaks. That's the objective. It isn't the end goal. It is a goal. Okay, got that out the way. It's very important. Let's get out of this. Now, in the S&P, we need to get to 2742.11 to start leg D. It's not there. The high that was made this morning was 2742.24. Wait a minute. Let me just double check that. 2742.10 was the high on the 14th. 2742.24 was the high today. I was busy doing this and I didn't have a chance to double check the high. It is in leg D. Finally, you've got the Dow in leg D. You've got the S&P in leg D. This is really important stuff that we're looking at here. And now look at this. In the 120-minute chart, the reason why I want you to go to this is that what's the objective? To get to a D. What did we get here from the low that was made on the 3rd of May? Right there. At 11:30 on the 3rd of May. Was that the 1st of May or the 3rd of May? At 2594.62, we went to peak A, peak B, peak C, peak D. Kaplop, pulls back, starts a brand new buy mode. A, B, C, D. Kaplop, pulls back, goes quickly to, now I'm going to put an up arrow in here only because it went to a D. Normally what I do is I do a plus sign. This is one of the, in the Chapman wave methodology, this is one of the few times that it's very difficult to identify correctly an up arrow. It doesn't mean to say you can't get the buy signal to buy mode. It's just that the MACD has pulled back so sharply, the stochastic has pulled back so sharply that it takes them a while to reinvigorate, to be able to get to positive energy. In this case, finally, the S&P went from under 20% to over 80%. And the stochastic, that's the stochastic and the MACD finally crossed positive. So this gets eliminated and it becomes an up arrow. I like to show what works very clearly and what does work, but not always clearly in the Chapman wave methodology. And now look at this. What do we have? We have the potential here for a little double top cup formation with a little doji. So what happens from here on for the rest of the day into Wednesday at this time, it's going to be very important. Number of reasons why it's important. We've got, I'm jumping the gun here, but that doesn't matter. I don't understand this. My eye says that that's not right. Okay, let me do this again. 2742.10 on the 14th at 11:30. 2742.24 at 11:30. This is this particular bar in the 120-minute chart. Yep, it did it. So MACD cross positive, stochastics at 80%. It's getting there. I like to be over 80% to be secure. Look how it happened when it was over 80%, how long we traveled on the upside. Anyway, this is going to be very important. That's what I really want you to say. And in that particular regard, this is the cash index. And yesterday, of course, we got that Chapman wave from Friday, a Chapman wave trend gauge that flashed a signal to say we should have a 9 to 11 point rally in the E-mini futures overnight, within 2 days. It happened overnight on Sunday night, which would really help the cash indices, which it did yesterday. So S&P in leg D, Dow in leg D, QQQ, as we went through yesterday with Tom from North Carolina, one of our Chapman waivers. We made a leg D to a peak D at 170.82 in the QQQ at 168.55 right now, 15 cents. Kind of struggling. So we've got the Dow, the S&P, and the QQQs in leg or peak D, and we've got the IWM right now in leg F and a little extended, quite a bit extended in price. But the technicals, even though they're at the highs, are still very strong. 96% in the daily stochastic. MACD still expanding. This is very good action at 163.04 up 10 cents. It says that the 161.70 area to 160.95 should be a cushion on any downside action. Weekly chart broke out. I've got this in a leg B. That's really positive. It could be an F/B. Wow, everything about it says this is a B. IWM, Russell 2000 is leading. Hey, look at this. The dollar in leg D, possibly and pretty much certain that today will be a peak D. I don't see what's going to take it above 94.06 unless there's late news that impacts the dollar positively. But we've done everything I wanted. We have been long since about the, I think it's the 6th of April, back at the 90 area in the dollar. It hit 94.06. That's a 4 point. It's about, what is about almost a 5% gain in a currency. That's pretty darn good, let me tell you. So what we've got here is the left side, right side price time match. What happened here? It should be this one to this one here. Let me just check and see what's going on. Okay, I got it. Yes. So I haven't finished working on this. It worked out okay for the first one. So I'm not sure. It's one of the very few times I've got a particular price point that I can use for the dollar. I need to go to this candle right here from the 7th of March. Let me just do that if you don't mind and see where we go. 7th of March is right here. That's this candle, little doji candle right there. Let's see where that takes us, if we can get a left side, right side price time match. And we've got, no, it's way, way extended. All right, that's interesting. I'm just getting rid of these things here. All I can say is that my target on the dollar has been, for the subscribers who are long, I said, as a swing trade, if you want to take some money off here, this is exactly the place that you can take it off. We want to hold as long as we can, and we've done something very unusual. Talk about that in a minute. But you see, if you go to this candle, oh, man, I have to take time now from this. But you know what? In the break, I'm going to come back to this. I'll come back to the dollar. I wanted to show you that that's the gold. Gold is trying to form some kind of a base here. Very tough. It's at 12.91. It's up a full 0.90. But this is the moment where the dollar should have a little bit of a consolidation, and gold could have a little bit of a rally. I'll talk about that when we get back. Doesn't drop attack. Questions hour. Dow's down 18. S&P's up 2.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, just very briefly, at 27:38 right now, the E-mini 2-minute chart is suggesting that 27:30, a close below 27:36 would say, yep, stalling motion here, the day of rest after a very big move yesterday, and above 27:39, if it can hold above 27:39 for a full 2-count 10-minute bar, that would be 20 minutes. Starting a leg B, that would be very positive as a 2-part session today, and that's really what I was looking at. One part that goes to about mid-session, about another hour or so, well, no, 12:20 already until 1 o'clock, and then from about 1:30 or so, the afternoon session. Do we give back some? And we'll talk about that as I move along right here. You'll see exactly why. So gold is trading up $1.4. Now, one of the reasons it's very unusual for me to do it, we have done it once before. It was a little tricky to do. And one of the other times since that September low that was made in the dollar, we've quite a few times we've been long the dollar. This is the longest in time that we've been the dollar for quite a while. And I would not be surprised if the dollar's getting ready for a little bit of a consolidation. I've been saying that for a while. It hasn't gone that much higher since I've been saying it, but it has gone higher. It's gone to the 94s, which was, in fact, my upside major trajectory in the short to intermediate term. Then there's another one entirely that's different altogether. So gold could, in fact, have a bit of a bounce. So we did go long the GDX. Now, this is very interesting. It's the gold miners because, in a sense, the gold miners have held way better than gold itself. And it kind of is almost the same. Keep your eye on the left chart, which is the daily chart of the GDX. Here we go. We're going to go to silver. Have a look at this. And you see silver more replicates the pattern of the GDX than the actual I'm going back to the GC. Keep your eye on the left chart. See, the GC has just been lousy. Just the gold has been terrible. But the stocks themselves have held quite well. Not all of them, but enough. And at the same time, silver has been holding kind of okay. And this mixed market in the metals is almost like you've got in the general market. After all, the Dow and the S&P have not even approached closely their January the 26th all-time highs, yet the IWM is screaming higher, and the QQQ has made a March high. Remember, it went on the 13th of March. So this is a very interesting period. We've just had a high-level consolidation. Now, what's really interesting is the SMHs at 107.13 up $1.07. Look, 107.37 was the high that was made back on May the 14th. And we just went sideways, chop, 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 chop. And all of a sudden today, we've spiked to a new recovery high. This is now leg C. And trying to put the whole package together, my impression is that there is enough residual strength to see slightly higher prices this week, but maybe only until about Wednesday or Thursday. And then we've got to reassess very carefully, have we now completed the up move in the arch formation of all these different, even the SMHs. Look, 108.56 was the high the week of the 29th of January. Here we are in the 107s. Just underneath, is there going to be a double top head and shoulders pattern there? Are we looking at the daily chart? Let me do this one more time. In the H pattern, that goes to a lowercase m pattern. In the weekly chart, there's the Dow. Have a look at the S&P. It's the same sort of thing, a little bit better than the Dow. Not much, but a little bit better in the H pattern. And all of them have terrific monthly charts still. Wow, I don't want to get in the way of the stance that we have, but at the same time, I think I have to start considering that it's been almost straight up for the last 3 weeks or so. And we've been very lucky. We've been long the Dow from that low, from the turnaround. We've been long the SMHs. Maybe time's running out. I'm not sure. I'm trying to hold on as long as possible. We have a bank ETF, which is doing very nicely here, but it's made a very quick peak A. This last one was peak A to peak B to leg C. So maybe we're running out of time. The VIX index is down kind of at the lows in the sink. Let me just do this one more time. The VIX index right now trading at 12.82, down 26, under the teens, in the 12s. It's starting to try to form some kind of support, but the MACD in the weekly is very negative, and the stochastics at 4.27%. It's going to have to be bad news that really accelerates like a rocket the VIX back into the mid-teens. Otherwise, I'm not sure that it's going to do it just yet. So far, I'm still positively influenced by different things. However, now look at this. The EUR, USD, the euro dollar, trying to rally, making the little W formation in the MACD with a histogram improving, a W formation positive divergence in the daily chart of the stochastic of the euro dollar currency pair. And the weekly chart went under the 200-period moving average, and for 2 weeks now, so far, it's been trying desperately to hold above the 1.176, I think it is, area. It's at 1.178. So far, the euro is attempting some kind of a bounce. It's gone to a peak C in the 120-minute chart. And lo and behold, USD JPY, the yen, this is the dollar-yen currency pair, has gone to that leg D. See, this is the reason why when I put the whole package together with so many Ds, I have to be considering that there is a sense of overboughtness on the lettering, but many of the tacticals so far have been working together. I had a question here, if I can go to it very quickly. Just want to check. Yeah, the VIX index is at 0.66, and the question really is, could I explain the trend gauge again, looking to see if we have a move down coming tomorrow based on a low trend today. Have it at 0.63. So let me just do this. Forever, I've been doing technical analysis, and I discuss everything very openly, even though there are a myriad purely Chapman wave technical techniques. These are techniques and technical tools that I've spent a lot of time and a lot of money trying to figure out, and then I just talk about it. Well, because I love the fact that here at TFNN we are all about education. Don't forget Steve Rowe's webinar coming up tomorrow night if you want a really good education. At the same time, there are two things that I've kept to myself, and one of them is the numbers on the trend gauge that for me are very important, that give the signals. I always say it's very high, And I always say it's very low, and those are my signals. The reason is that over the years, the VIX index, which at one point I used to talk about with numbers specifically, started to change. I noticed that I had to change my numbers on the VIX index. It had evolved over a period of time where I needed to look at lower numbers because we kept going down, and eventually went down to the 8s. So I kept those. I learned that I had to keep those numbers to myself because it was unfair for me to give you a number when there was the chance that those numbers could change, and you could not hear me change the numbers, and they are looking at the wrong numbers. Therefore, I just say very high and very low. At this particular point for the questionnaire, we aren't even close to being too low. So there's no signal right now. That's the long way of saying there's no signal in the Chapman Wave Trend Index. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
7, 8. 8 times. So 8 times. Actually, the questions came in and a lot of people wanting to know about my trend gauge. So going back, I can go back further. I just don't have time right now. To 2015, I've got 8 times that my tool didn't work, and I wanted the advice of 9, 5, 6, 7, 8, 9, 31, 34, 35, 66, 39, 44, 65, 66. Oh, I don't know. So it's about 100 times. Out of about 100, no, it's more than that. It's more than 100 times. Oh, man, much more than 100 times. So, yeah, it's not a bad average, that, right? Okay, so that's enough with that. Let's get on with our story. And also, the other reason why I'm getting a little bit cautious here is that we've gone to leg D in the Dow, and it's Chapman Wave 5. I haven't got a signal yet to say it's a Chapman Wave 5 completion, but it did get to that Chapman Wave 5. You know, that's the technique that I've developed over the last few years, which was the genesis of trying to figure out within the Chapman wave how close to the Elliott wave, until I found out that the only thing about it is that there are 5 waves. That is similar. Otherwise, just about everything is different about it. So anyway, we're in that 5th wave. It says, be a little bit careful here. Let's go on. A bunch of comments. Yes. Where am I? Oh, we were looking at, I want you to look at crude oil. There we go. Crude oil is trading right now up 29 cents. What is it in? It had the alternate count, and now it is in leg right there. It went GC, and today it's extended leg D, also getting a little toppy in notation, and the technicals are all up at the higher end. No signal yet other than the unbalanced volume is suggesting we could be in for A, B, C, D. In the 120-minute chart, we could be having a little bit of a dip. So in other words, we've got the dollar, we've got the dollar at D, leg D. We've got crude oil, leg D. We've got all those other key indices now in Ds. It's just saying to me, hey, you know, this is usually where you go short. I just didn't see enough energy on the short side yet. I spoke about the SMHs. SMH, just one more time, is in leg C. It doesn't really have to get to a D, even though I've got it in a buy mode. It is in a retracement failure mode. That's just explaining things to say that the last peak D at 114.55 on the 13th was very, very important because we've gapped down after that, and we haven't gotten close to 114.55. We're 7 points away. Okay, let's get on with our story. And I wanted to get to this. Look at this chart here. Leg D in the weekly chart of the 30-year TYX. We haven't yet made a new high above 32.47. It could turn out to be a peak D this week, a peak F in the TNX. I'm really thinking it's more like a B than an F, and more like a B than a G in the 5-year. But I'll let this play out. We don't have a position. Of course, I should have had a position because we've been talking about it for so long, a position in the TBT, and the TBT is still in leg. It made a peak E, holding very nicely at 39.15, went to 39.73 on the 17th. So it's just digesting the gains, and it hasn't gone to leg D in the weekly chart, which is above 39.86. And I'm just thinking when we do get the bigger consolidation, I wouldn't be surprised if it's because the TBT actually gets there above 39.86. Now, what are we going to do? I want you to go to, so I had a question yesterday, and I'm so sorry, Ben, I saw your call, but it was just too late. I wasn't able to respond to it. You called in and you wanted to know about the SPY. So I hope you're listening. I know sometimes you're able to listen. You can only call in rarely. 274.08 was the high of the 14th. Today's high is 274.25. To even the SPY, sometimes there's a divergence between these ETFs and the core instrument, which in this case is the SPX, the S&P 500. Here we've gone to a leg D. Now, you know that when I'm looking at Ds and I see Ds that are underneath the previous high, major high, and in this case, that was the major high on the that was the last high. It was a peak D in the SPY at 280.41. But we made that other high, that was an F in the SPY at 286.63 on the 26th of January. So we are quite a bit underneath that, 13 points. And I'm looking at this and I'm saying, here's another reason we've gone to the Chapman wave inside track. Is another technique that I developed. Resistance level, we've just snuck above it in a D, kind of struggling here. The MACD, the moving average convergence divergence, is good. The histograms are starting to shrink a little bit, but it's still very, very strong. And the stochastics very strong in an M formation at 87.90. So I don't yet have a signal but I'm watching it really closely. So I think I've covered a chunk of what I want you to do. Now, I had a question about Boeing. It was, I think after my show yesterday, or maybe towards the end of the show, I didn't have a chance to discuss it. Boeing spiked. I did discuss it yesterday, and I said, wow, I've missed this completely. I was absolutely sure that Boeing needed to have, it didn't have to listen to me, obviously it didn't, but it looked from the chart formation, I said I see very little chance in this particular move right now of going to an all-time high until it consolidates much longer and a little bit deeper. Those are my words. I cannot backtrack on the words. That's exactly what I said. That's exactly what I felt, and that's exactly what my charts were indicating. But we know that Boeing is one of the very strongest stocks in the Dow. It has been, and it continued all the way into the February high on the 28th of 371.60. But as you can see in this drawing that I'm doing here, another Chapman wave series of techniques, the cup formation, and in my CD introducing the Chapman wave methodology, I spent a lot of time discussing this particular set of tools that you could use. Look at this. If I use this little tiny doji here as a fulcrum, right there, this one right here. I have techniques that say if you can get an exact plumb line, that is the turning point high or turning point low of the number of bars to the upside or the downside, and you're able to identify the pattern as a cup or an arch, and then say, you know what, I believe from that low we should go an equal number of bars to the upside or downside. I love when that happens. It doesn't happen. That's the reason why to program this would give you so many false indications that you'd get confused and not recognize the one that really works. Or the ones that don't work think that they're going to work, but in fact, they're on their way to not working. So I do it by eye. I don't know. I've got a feeling this summer I'm going to just get fed up and say, you know what? I'm now going to start doing all the work that's necessary to notate all these things. I know Steve Rhodes has done a good job. Excuse me. Excuse me. Has done a good job of doing the core basics of the Chapman wave notation, something that I've done years ago. It's the alternative counts that really take time to get right. But you can see this Chapman wave inside wedge target line says that by the 30th of May, there should be a test of the 371.60 area. What is it, about 8 sessions or something like that? Well, I think it should happen sooner if it's going to, otherwise it's fading. I'll be right back.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I realized I didn't quite finish that SPY analysis for Ben. So let me just go back. We have Boeing right now, and Boeing gapped up yesterday. This is a Chapman wave technique, the Chapman wave inside wedge target resistance line. It went right to that line. We'd never dreamed over here that it was going to do that. Look how it gapped up. Huge. And then it still had a 12-point gain. And it hit it exactly, and today it's consolidated. So my answer to the person who said to me, what do I think, is I said, this is where I'd be using some protection. I probably would say, you know what, I was wrong. I'm going to take some off. Maybe you want to keep some, or I'd even use maybe a call, wait for some kind of a pullback, buy a call, and say, you know what, the call would be my protection, because if it goes high, I'll make the money up. I won't lose. I'd lock in whatever it is at the price that I buy the put. But if you don't want to do that, you just got to be careful, because it does look like it wants to go to a D now. But that D could be underneath the 371.60 all-time high in Boeing. But what I wanted to say is that this particular pattern says that by the 30th of the month, 371.60 would be a target if, as long as it doesn't break, say, the midpoint of the gap up. So as long as Boeing doesn't go below 355.50, close below 355.50. If it does that, then this is just a false move, and it could fail. But I have to tell you, the technicals improved. The on-balance volume is the one thing that says to me, and I don't understand it, because the on-balance volume has been failing. And it's basically saying that this whole move since the February, exactly there. February was exactly on the day of the high. The on-balance volume made its high, and ever since then, the on-balance volume has been failing. What does it say? It says that the total, every day, if Boeing closes up, you add whatever the volume is of that day to the running total. And that says Boeing has been making, this is distribution in Boeing, and that's really what I was looking at before. So this whole move that goes basically from the 344, 346 area right up to yesterday's high of 365, 365 round number, says to me, I'm wrong because it's at a spectacular rally. I'm not wrong because it hasn't made a new high, but boy, I mean, I'm not going to obfuscate. I never expected it to get into, to hold, even if it touched the 350 level, to actually hold there, and not only that, it gapped them into the 360s. So I'm wrong, but it still hasn't broken to an all-time high. I'm saying I wouldn't play games. I mean, if you're short, you need to have some protection. It wasn't my trade, it's your trade, but I'm saying my analysis didn't anticipate the speed of this move. I did think later on Boeing could come back into play, but right now, you know, look at GD, General Dynamics. It has not done that. It's done exactly what I was thinking. It's failing. Look at LMT, which is Lockheed Martin. Same thing. So this Boeing is the domestic side, but the PPA, which is really what I was basing everything on, that's the Power Shares Aerospace and Defense, hasn't gone to the all-time high. It's obviously with Boeing in it, it's been helped, but it's telling me that there's going to be a stall. There should be a stalling formation. Whew. Okay. Now the SPY, let me just quickly clarify, because I don't think I actually made a concluding point. What I wanted to say is in the SPY, with the MACD and the stochastic still strong, it would take a move below it's at 273.63 right now, acting kind of nicely for leg D, but not great. Nicely, but not great. And the weekly chart is still just in a retracement failure mode. So I'm looking at this and I'm saying, if the S&P is able in the next, today is Tuesday, we haven't even gotten to Wednesday, huh? If by Thursday afternoon, the S&P has not closed under 271.75, that's the 9-period exponential moving average, but even if it's just a blink, if it just touches the high today, 274.25, if it just touches this week, 275, I would have to say we've kind of raised the base of support, at least in the very short term. The intermediate term says no. The 269s is an area that should be hit at some point. So that's 4 points. It's like 400 Dow points. Nah, it could even go lower than that. But that 9-period moving average in the weekly looks like it's beckoning for a test at some point. Whew, sorry about the length of all that. Now, I wanted to do a couple of things. So this is a time that you can go to the front page of TFNN. There are fantastic discounts on all our services. If you're getting someone's service here and you like their work and you'd like to get a really good price, save money, a lot of money actually, this is a great time to do it. So go to the front page. We've got going into Memorial Day. I believe it's Memorial Day this weekend. Big savings. So I'm going to do this just for a moment. You see this chart right here. For instance, we are long Boeing. We are long UTX. Whoops, there's a Freudian slip. United Technologies. From the 119s, it's trading right now at 128 something. I'll tell you exactly, 128.62. So we've been long right there. And this is what I give my subscribers every day. Whenever I can, I try to get every one of our positions, even the ones that we're just looking at, I try to show them in detail so you know exactly what I'm using, my Chapman wave methodology, why I'm doing it, what I'm doing it for, and the reasoning. Here's the daily, here's the weekly, here's the monthly, and right in this insert is the 120-minute, which says it made a leg, a peak D, it could bounce a little bit, but the move yesterday, the gap up in UTX was absolutely fabulous. I go into it in great detail. It would be maybe a 2-minute read. If you're longer, 2 minutes is not a high price to pay in time. If you have it, to be able to look at your stock and say, hey, that's working very nicely. And I do this, we're along the Dow, so I give if I can find it right here, it's right there. So here's the Dow. This is the 120-minute chart, made a peak C, Chapman wave 4 down. I was expecting that there should be a 5 up to go to a new recovery high. And here it is without the MACD and stochastic. Here it is with the MACD and stochastic. I tell you exactly what happens, and I explain what we're looking at. And I say at 11:10, if it's up 50s or more, that would be excellent follow-through strength. But if only minus 20s or actually minus 30s, the Dow will take a little breather, especially if no new high is established in the morning. Well, we got everything this morning. Look what happened. We got the high in the 120-minute chart. We got that leg that we were missing. Here it is right here. So, no, I'm sorry. We got the leg 4 down, and now we're waiting for 5 up to go to a new recovery high. So this is the analysis there. And yeah, we go for I don't want to make this too complicated. Right there. And here we are. The MACD is good. Stochastics at 80%. I like it over 80%, 80 or over. So it's holding at 80, and that's why the market seems to be holding okay. I'm anticipating one more pop to the upside. So it's very detailed in all the stocks we have. And for instance, we have a stock called Ladenburg-Thalberg. It's called Ladenburg-Thalmann. and I did the left side, right side monthly chart, which I said this is our core focus, left side, right side price time match between May and June. It should try to get to the high that was made that month. In June of 2015 at 380, it went to 384. We've been long since $3.38, pulling back a little bit today, but it hit 384, and I show the analysis, etc. So that's the kind of work we do. So if you go to the front page of TFNN, you're able to get my newsletter for a trial.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Let me do two clarifications. The number of times that the Chapman wave trim gauge has not worked when it gives a low reading is that's the times that we've even had huge moves to the upside in the market. The Dow, it's based on the Dow, did pull back even once it was up 350 and pulled back to like plus 45. I still gave that a miss because it didn't go negative, and that's the objective. But the one that has a rally within 2 days, that's the one that has just a very, very high reading as well, but much higher even than the other. Okay, so there's a couple of things that I wanted to do. I had a question about GWPH. This is one that was on our list. We bought it at 145.46, and I just got a little nervous because it was at peak C, but I gave the plan. I gave it so nicely. I said we're going to buy here, and then we're going to add on a dip, and I don't know what got into me. I don't know what it was. I can't explain it. It was an absolute human fault, not a default. And we got out of it for a 4-point loss, and the next thing we know is trading at 160.55. The question is, where would I get back in? I'm going to have to wait now, and I don't know what my thinking is. I'm just going to have to wait. We might have missed it. I don't know if we'll get it at 144 in the next week or so. We'll see. But it's on my list, and the reason is GW Pharmaceuticals, medical marijuana. This is in play as a long-term position that one I think can take. That's my thinking. I'll have to reassess and see if that's still the fact, but I don't know when we'll get back in. Okay, next thing is I just wanted to show you. So we are along the semiconductors via the SOXS, the 3 times long. We've got a position there. We've taken some profits on the way. It went to leg C, SOXL. Let me show you the actual chart itself. Yeah, it did go to the SMHs went to leg C. This one didn't. There's a little bit of a divergence. Weak, NVIDIA is weak, but look, MU is spiraling higher. The other semiconductors are working very nicely. Wow, if you've got NVIDIA rallying right now, it would be up much more. I'm watching this closely. Maybe it's running out of energy here. I'll have to reassess tonight, but we've had a really good profit in this so far. So we've had some stocks that are doing extremely well, and we just today nibbled on the GDX. How's that for a tip? And I don't know if it's going to work, but I think a dollar could pull back a little. Stay tuned for Steve Rhodes. I'll be back later on with Tom this afternoon. Have a great day. Otherwise, I'll see you tomorrow. Check out the picture.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.